Board, Himanshu Srivastava, who's the Principal Manager Research at Morningstar, joining us to give us a perspective of how he's seeing things. Himanshu, let me throw this open. There's so much uncertainty globally. Talk to us about what are you seeing in terms of trends? The fact that equity markets are at all-time highs, the US 10-year bond yield is at 4.5 and continues to remain quite resilient around the 4.3 to 4.5% band. What is it indicating to us, in your opinion?
Right. So if you look at what I normally track is the FII flows into the Indian equity markets, and the way US bond yields or US dollar, the way it has behaved over the last few years have definitely had an impact on the flows as well. Now we have seen kind of a risk aversion or global risk aversion among foreign investors towards emerging markets, and India is not insulated to that. Over the last few months, what we have seen is there have been an enhanced geopolitical uncertainty. We have seen currency volatility at its all-time high. And this has significantly impacted the flows into the Indian equity markets. Now, one way to look at it is, or someone would think that foreign investors are becoming a bit cautious towards India. That is true, but they are not disillusioned. They continue to believe in India, a long-term growth story. But at the same time, I think the global risk aversion and valuation, the discomfort towards valuation is also there, and that is also one of the factors which foreign investors are focusing at this point in time. That is where we are seeing flows going out of India into more stable asset classes or more like safe haven kind of asset classes like US dollar or US treasuries. And that is where, as we see, FII flows into the Indian equity markets as of now.
You track flows into India-focused overseas funds and ETFs. What has been the trend like with respect to flows to those funds?
So the trend, if you look at the last quarter, that is until March, the trend hasn't been too conducive. We have seen almost $5 billion moving out of these funds. And then again, it's the same trend that we have seen on the overall equity market as well, like FIIs pulling out money, and the same is reflected on the India-focused offshore fund and ETF space as well. Now, again, what we are seeing is the flows have largely been from India-focused offshore funds. So there are two segments. One is the fund and the other is ETF. ETFs have been more resilient, which also shows that foreign investors are not completely losing out on India. They are holding it. So where they are finding comfort at the same point of time, they are also looking at ETF as a short-term tactical allocation when they are coming out into the Indian equity markets and putting money there. But at the same time, from the long-term perspective, they are adopting a cautious approach. Given the uncertainty that we are seeing in the global economic space as well, and given India as an emerging market is sort of prone to, like other emerging markets, to these global volatility, foreign investors are normally as a wait and watch approach on the Indian market, but at the same time, not to lose out on the opportunity, they are using ETFs as a tactical way to stay invested in the Indian equity market.
And how are they looking at the currency depreciation, because that hits their returns as well, and you're tracking nearly 350 funds out, which is there. So how are they looking at that? Even despite they've been staying invested, there's a negative return which is flowing in.
Absolutely. So currency volatility is definitely one of the factors, and that is what is one of the reasons why we have seen outflows from these funds as well as from FIIs into the Indian equity markets. Now, depreciating currency, definitely Indian currency, you might end up making profit in terms of market, but if the currency depreciates in dollar terms, you end up losing it, right? So an FII would prefer a long-term depreciating currency at a slow pace rather than sharply depreciating currency. And that is one of the risks that we are seeing in the Indian equity markets for foreign investors to invest substantially into the Indian market. So I think currency needs to stabilize at somewhere to gain more, for foreign investors to gain more confidence. Now, you can also see that if currency is depreciating and markets are correcting, that also provides an opportunity for investors to invest in the market because the valuations are relatively attractive. But that is not happening because I think that the FIIs are not seeing currency becoming more stable at this point in time. The more the things become to stabilize, both on the economy side as well as on the currency side, I believe that the FIIs may come back going ahead.
Therefore, Himanshu, are we at peak pessimism where FIIs are concerned? Currency depreciation is now behind us. The AI trade has largely played out. I mean, it's anybody's guess, right? It can play out for another couple of years, but broadly, we've seen a stupendous rally. I was reading something this morning, and it suggested that Micron has rallied from $70 billion in market cap to $1 trillion in a matter of the last 12 months. So you've already seen a stupendous 15x rally. I'm trying to now get a sense, are we at peak pessimism where FII flows is concerned, and therefore would the Indian investor be far better placed buying at this point, because you could well see risk reward turning favorable where flows is concerned?
So pessimism, I would say, if pessimism, I won't call it a pessimism largely, because I think the structural growth story is still positive for India, and that is what FIIs are positive about. I think it's largely related to the global risk aversion and valuation discomfort. So yes, what we have seen that the pace of outflows has also gone down significantly. So there's some sort of a stabilization that I could see in the market from the FII side. Coming to the Indian markets or Indian investors, I think Indian investors, for foreign investors, India is kind of a stock, right? They will evaluate India with other relative markets, and then they will decide whether to invest or not. For Indian investors, India is the only market available. So I think for them, obviously, this is a good time to continue their SIPs, continue their investments, especially from the long-term perspective. So I think Indian investors, from the long-term perspective, when equities are long-term, the market timing doesn't matter. They should continue to invest their money into the markets as and when they have that money to invest in. But from the global perspective, I won't call it a kind of a pessimism, rather than it's a cautious approach, given the environment that is there and valuation discomfort. So as and when these two things balance out, we can see FIIs again, and we have seen that in the past happening. You know, FIIs, this is not the first time FIIs are moving out of Indian market. They have done it in the past as well, and they have come back again. As long as India's structural long-term growth stories remain intact, I think that is where we should be focusing at.
Give me a sense of the FI holdings at this point in time. You know, at the end of December, it was around $826 billion in India. At the end of March, it came down to $660 billion. How much of that was an outflow, and how much was because of the currency depreciation that came in?
So I don't have a bifurcation as such, but the outflows were from the India-focused offshore and ETF space. It was $5 billion of outflows.
And the differential here is more than $160 billion which has come in.
Yeah, that could be currency depreciation. That could also be the market correcting as well.
The market didn't correct that much in Q1.
Roughly around 10% was 10 to 13%.
And 20% fall in the entire value which is there.
Absolutely, yeah.
So you are saying that 10% market fall and the currency depreciation and $5 billion of outflows which is there. Yeah. But what is the outlook there? Do you also do a survey of what's the kind of outlook which is there for foreign funds looking at India-specific funds or ETFs?
So as of now, we have not done any outlook as such, but what we have seen a trend now that trend matches with the global scenario. That trend also matches with the way FIs have been investing directly into the equity markets. So what we try to do is to analyze what has been the trend in terms of the FI putting money through these funds, offshore funds, into the Indian equity market. What we also try to track is how FIs are putting money through regionally diversified funds. Now, these regionally diversified funds are those funds which are global funds, Asia funds, and emerging market funds. Now, these funds have allocation to other markets as well as in India. So what we have seen is in the last quarter, the India allocation has sort of gone down, right, compared to the previous months. So, but that keeps on changing very dynamically. So as and when things improve, we see these flows coming back through India-focused offshore funds as well as regionally diversified offshore funds as well. Now, we have also seen in the Asia-Pacific fund, we have seen some inflows as well. Now, those inflows are largely to balance out India allocation in the global indices, right? At some point of time, it's not only about the correction that is happening in the market or they pulling out money. They also try to balance India allocation vis-a-vis the MSCI India index in the whatever benchmark they are following, so that if the India allocation is moving down from that particular level, they try to match it up so that they are there where the India allocation is, within the global indices.
Himanshu, it was a pleasure talking to you today. Thank you very much for joining us and giving us that perspective on fund flows.
Absolutely. Thanks. Pleasure is mine.